Okay, so we are recording. We are live streaming. So Scott, when you're ready.
All right. Well, good morning, everyone. My name is Scott Rogowski. I'm the director of the Northern California SBDC, Small Business Development Center's Finance Center. And we are bringing this to you today. We do this every Monday, Wednesday, Friday from 10:30 to 12, where it's a live Q&A CARES update. We should probably call it a disaster loan update. So we'll change that next time. But it's all for small businesses and organizations. And this is our interactive way of connecting with you. This is being streamed as we speak on our YouTube channel, as well as AskSBDC.com. Thanks to Aaron Phelps, our amazing marketing director, and his team. So this is session 32. We've done 32 of these, or after 12 o'clock, we have finished 32 of them. Today is June 19th. It's Friday. I'm super excited it's Friday. I hope a lot of you are too, because then we get to go into the weekend. And all of you that are fathers, happy Father's Day. Hope you have a wonderful weekend. We are all in this together, and we're going to conquer some amazing stuff. Quick introduction, we are supported by SBA, Small Business Administration. They're our federal funder. They're also sponsored or supported by the state of California, the Governor's Office of Economic Development, which is called GoBiz. They fund us, SBA fund us, and because of that funding, we come to you at no cost. We offer no cost one-on-one advising that is confidential, and we offer that for small businesses and organizations. We also offer at no cost, mostly at no cost, is webinars and educational events such as this, where we teach you how to start, grow, operate, sell your business on all different aspects of whether it would be to hire people, launch an e-commerce platform, hire somebody for marketing, or I don't know, manufacture something. But all different industries, all different sectors, we offer all that. We've been around 40 years. Are not necessarily humbled in the SBDC Center, but Northern California, but we've been around as an entity, as an organization for 40 years. We're a national organization. There's 1,000 centers across the country. In our territory, we cover the most 36 northern counties of the state. We go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area, and then we also cover southeast of where Stockton is, and then back up through the Nevada and Oregon border. That's our territory. I'm the director of the Finance Center, and what we do at the Finance Center is we have individuals, we have advisors, consultants here for you at no cost that can do anything for you regarding finance. If they can't do it, Sunita and I will help them out. Sunita Maharaj is my associate director. She's here. She's going to help me answer Q&A as I speak, and then we are going to jump into live Q&A. And what we're going to do, so the Finance Center, so we specialize in doing nothing but getting business owners loans, or entrepreneurs, or startups, or whatever you want to call yourself. We help you get loans at no cost. And we know it better than anybody else in the business because we've been studying it for a long time. All right, so the agenda, we're going to do a disclaimer. We're going to talk about the PPP Flexibility Act, which came out on June 5th and changed a bunch of things. Then we're going to talk about the new forgiveness application easy form, just like a few highlights around the sole prop side of it. And then we're going to go into, on Monday, this is what I said a couple minutes ago. On Monday, we're going to go over the new forgiveness application, the long form. So Monday, 6/22, we'll do that. Sole prop updates, that's the easy form. The FTE reduction updates, this is new today. The safe harbor updates. Then SBA is potentially going to come on. I'm not sure if they're going to come on, but if they don't, then we won't get necessarily an update from them, but we have other stuff we can talk to you about. And then Q&A, and that's where we get to answer a bunch of questions very fast, because that's our favorite thing to do. So disclaimer is that things are changing all the time. This information was correct when we put the presentation together like 5 minutes ago. Things are changing all the time. Okay, so EIDL is back open, or back up, or open back up, however you want to say it, for all types of businesses, including 501c3s. So if you're a 501c6, it's not back up for you because it never existed for you, or PPP doesn't exist for you, but there's other loans out there that do exist for you. Actually, I was supposed to put something else in this thing, but I'm going to have to read it later. Let's see something. There it is. Okay. All right. So so we don't want you to hesitate to apply. You need to apply for EIDL if you want EIDL money. And then guess what? You can also apply for the advance too, because it's available as well. And the advance is $8,000 per employee. So if you're a sole prop, you qualify for $1,000. And this is money you don't have to pay back. It's forgivable 100%. It's not a grant, but it is forgivable 100%. If you have 10 or more employees, you qualify for $10,000, all 100% forgivable. So there's still money available for PPP. Currently today, we're at today's 19th. You have 11 more days to apply for the PPP money. There's still money available, probably about, I don't know, 100 billion or something like that. So if you're not sure if you qualify for PPP, stop asking yourself that question and just apply. We won't know until you apply. We're not the beholder of the decision, the lenders are. So, and don't hesitate to apply for EIDL, and don't disqualify yourself. And anybody tells you they don't qualify, they're wrong. They don't know what they're talking about. Just apply, please. So we're not privy to lenders that are coming forward for Main Street programs or Main Street loan program, whatever it's called. There's these Main Street loan programs. The way there's 3 of them. There's like 3 different types. The way they're written currently is that it sounds like they're only used for big businesses, not mom and pops, which is what PPP launched for. That's why all those big companies got it, and they gave it back, or some gave it back. Then they did round 2 of PPP, which we're still in, and that is for mom and pops, and the loan sizes are a lot smaller. PPP average loan size was like, when they first launched, it was like 5 to 10 million. Now it's like 80 grand, so it's really cool. But these Main Street programs, they haven't figured them out yet. And I talked to some attorneys about it. They don't know what's going on either. So stop talking about that, please. We don't have any information on that. If you want to read it, we'll send you the document. You can read it, but it's like written in law. So, all right, here we go. Here's the most updated information that we have. So there's this new PPP Flexibility Act that launched on June 5th, which seems like yesterday, but apparently it was 2 weeks ago. So if you are funded, so if you have PPP, if you were funded before June 5th with PPP, then your loan is a 2-year loan, not a 5-year loan. It's still a 1% loan, but it's a 2-year loan. The only way for you to get it to a 5-year loan, like everybody else that got the money after June 5th, is you have to go to your lender and negotiate. And we don't know what that looks like. There's like no negotiation form. So you just got to go there and talk to them like a real person, or your friend, or whoever, your mom or dad. Just talk to them like they're your person, okay? And say, hey, I really like a 5-year, because a 2-year I can't cash flow. I can cash flow a 5-year. And if you want me to go bankrupt and not pay this loan to you, then you should keep me on a 2-year. But I want to stay in business. I want to be a 5-year. It could be something simple as that, okay? If you want me to help you, I can help you. So if you go there and negotiate, you have to do this agreement with the lender. And we don't have a form for this agreement, because guess what? It doesn't exist. It's not like we're hiding it from you. It just doesn't exist. Okay. So what we're doing is we're telling you the information that we know as we know it, and we know as much as we can do research on, or SBA tells us, or we learn from the Treasury. So if you can change your loan from 2 to 5, it's possible. But it's not automatic for you, as it is automatic for everyone else that got the money after June 5th. So you get to also choose if you want 8 weeks or 24 weeks, and that's tricky, right? I get that too. And what does that negotiation look like? We also don't know. We don't know what that looks like. I'm assuming it says, hey, Mr. Lender, I'd like to take it from 8 to 24. Is that cool with you? Thanks. Bye. Have a great day. Something like that, okay? So you get to choose what you want, either 8 weeks or 24 weeks. We don't know. We get a lot of questions like, hey, can I choose 12 weeks or 18 weeks or 22.5 weeks? We don't know, actually. We're assuming, we're being told that you can either choose 8 or 24. But if you spend it in 12, you have to wait till 24 weeks before you ask for forgivability. Right, Sunita? Is that the way you would interpret it? Okay.
Yes, right now they only have those 2 choices per what's written. It may or may not change, but that's how exactly it's written at this point in time.
Okay, thanks. So the other thing that changes, there's payroll expenses that you can spend. And we're not going to go over them today because we talked about them the last 32 sessions that we've done, or 31. And that minimum went from a 75% of your money to a 60% of your minimum, 60% of your money. And what this looks like is, before it was a 75-25 split. So that's gone. We don't want any more questions about that because it's gone. You just got to take it out of your brain and put it away, okay? There's no 75-25. It's only 60-40 for everyone. The only thing that is in limbo is not everybody gets a 5-year. You have to negotiate that. So that all payroll expenses minimum went from 75 to 60, and then the allowable non-payroll expenses went from, it increased, which is cool, 25 to 40. And those expenses are, there's only 2 expenses that you can spend money on up to 40%. And that's not payroll. And that is rent, if you don't own your building. If you own your building, it's mortgage interest that you pay monthly, or it's and utilities. And utilities covers a bunch of stuff. The only one that we don't know yet is transportation, so stop asking us because we don't know. But if you want to call DC, you can talk to them. I'm sure they know. Or I think they're hiding it somewhere in a vault. They won't tell us, but who knows? Okay.
I've got a little bit more information in regards to transportation. Sorry about that.
Oh, you do? Okay, cool.
Yes.
You want to say it right now, or?
Sure. Yeah, I can just interject really quickly.
Yeah.
Transportation is how IRS specifies it. So you should talk to your bookkeeper, accountant. We could possibly get something from their website, but that's where we would get it from. It's the website, what is considered transportation on your tax returns. So that's how they're looking at that. And that's why they haven't defined it, because there's different ways of looking at transportation. So there's no definitive way except to look at your tax returns and then go to the IRS website and see what they consider tax returns. We could possibly get you some additional information next week, but we have to vet it first before we provide it to you. So that's why we're not going to go in depth with that either. But that's what they've been telling us, SBA has been telling us, it is transportation via what the IRS would consider transportation.
Hey, I don't know, what is that weird noise?
I don't know. I'm assuming it was someone vacuum cleaning either in your garage or
I'm not in my garage anymore, so stop telling everybody that I'm there. Okay.
I'm not in my garage either.
Okay, well, then I'm not sure where the vacuum noise came from, but it came from somewhere.
All right, I'm trying to figure out
How to get back to the screen? You stop sharing your screen briefly.
Yeah, I know that. I did it for a reason. Just a second. All right, cool. All right, so we talked about that. So the deadline used to be June 30th for you to bring back all your employees, the same number of FTE employees you had before February 15th, before COVID happened. So if you had 10 and now you have 5, you got to bring back the other 5, and you have until now December 31st to do that. And you have to, there's like a letter you have to write to figure out if they don't want to come back because they love unemployment better than coming back to work for you. So we have an HR expert that can help you with that. Yeah. So it says you get to choose between 8 and 24. So you get to choose all by yourself. And then the deferred payment changed on PPP. They changed everything just to mess with us, I think. So the deferred payment changed. So it's not 6 months anymore for everyone. It's actually 10 months after your chosen covered period. And your chosen covered period is either 8 weeks or 24 weeks. But then it gets really even trickier, okay? Because if you chose an alternative covered period, which is, say you get funded today on June 19th, but your first payroll doesn't hit until this Sunday on the 21st, you get to choose that day to start your 56 days or your 8 weeks or your 24 weeks, okay? So that's exciting. There's like 3 different ways to do it. Okay, cool. So we're gonna go into the easy form. We went over this on Wednesday. The easy form is for these 3 types of businesses. So if you're self-employed, you have no employees, you get to fill out the easy form. And it's like 3 pages, really cool. Then if you did not reduce the salaries or wages of your employees by more than 25% and did not reduce the number of hours of your employees, sorry. Should change that to your, apologize. So if you did not reduce the salaries or wages of your employees by more than 25%, reduce. And you did not reduce the number of hours of those employees, any, like 0. Like you can reduce their pay essentially by 24%, and we can't reduce their hours. Can't go from 40 to 39. So Or your experience reductions in business activity. So you experience reductions in business activity, which everyone has, right? We don't, like, not everybody's 100%. Like, I go into a restaurant called Lazy Dog in Folsom, and I can't get hummus because they're not at capacity because that side of the kitchen's not shut on or on, which is weird. So we're all experiencing reduction of business activity. So as a result of health directives related, so as a result of health directives related to COVID and did not reduce the salaries or wages of your employees by more than 25%. Sunita, is there any more you would say to all this right here? Or?
No, so these are the 3 reasons that you can use the EZ form. So it's not, you have to have all 3. If you're self-employed, no employees, you can definitely use the EZ form. If, you fall into the second bullet point, you can use the EZ form. If you fall into the third one, you can use the EZ form. It doesn't mean that you have to hit all 3. So that's the great thing about the EZ form. You don't have to do the schedules or the worksheets for the EZ form. That's about it.
All right, thank you.
Welcome.
So this is a sole prop income updates. It's actually, we should call it like income updates for everyone, but we get most questions around sole prop, but it actually qualifies for everyone. The first bullet point is only for sole proprietors. Actually, sorry, I apologize. It's for everyone, actually, sorry. Excuse me. So
sorry, Scott. It is just sole props on this one, because if you're an employee, I didn't see anywhere that your cap is increased. I believe the cap for an employee is still the 15,385. It's different for the sole prop.
Interesting. Okay. Well.
Unless I'm completely wrong, which, but that's how I read it with the application. I'll dig more into it, but that's how I'm reading it. We'll let everybody know on Monday, for sure.
Okay. We'll let you know, but okay. Good thing to know that. I shouldn't have said it on the webinar yesterday, but okay. All right. So if you choose 8 weeks, because you get to choose 8 or 24, but if you choose 8 weeks, then as a self-employed person or like a partner, your max cap that you can get forgivable to pay yourself is $15,385. So that was what it was before June 5th. Or actually not before June 5th. Sorry, that was before Wednesday, actually, because this changed Wednesday. So if you choose 24-week covered period, if you choose a 24-week covered period, it does not exceed 2.5 months worth of compensation for any owner self-employed. So if you choose a 24-week period and it doesn't exceed 2.5 months, which is weird because 24 weeks is more than 2.5 months, but
that's why all they got low for though.
Yeah, that's why this thing is really confusing to understand. Thanks to Sunita, she put all this information on here, so we're still trying to figure out what it really means because we didn't write the law. But if you choose 24 weeks and you don't spend more money than 2.5 times of your own salary in 24 weeks, then your max forgivable amount as an individual is $20,833. All right, that's tricky. Okay, sole prop rent, interest, and utilities update. So payments of interest on mortgage obligations on real, which means a commercial property, or personal property, which means your house, incurred before February 15, 2020, depending on where your place of business is. Is it in your house as a sole prop, or is it in a commercial building that you own? Or is it in a commercial building that you rent? Which is the next bullet point. So if you rent on a lease agreement, all this has to have had occurred before February 15th. So in 2019, if you work from home as a sole prop and your mortgage is $1,000 a month and you charge your business maybe 25 to 50% of that interest or payment because you take part ownership over the house as your office, then So you would have had to have that set up either in 2019 Schedule C, where it says like you pay interest or you pay rent, or since we're in the year of 2020, which nobody's filed taxes for 2020 because it's not over yet, unless you're, never mind, I don't want to go through that. So if from January 1st of this year to February 15th, which is 45 days, if on your P&L, profit and loss or income statement, there's an expense item for interest expense because you pay yourself where you live, or it's a rent expense, whether you pay yourself, whether you rent a space. So that's how that works. But if you did that last year, it'd have to be on your Schedule C. If you haven't filed your Schedule C, which you don't necessarily need to until July 15th, which maybe they'll extend that, who knows, but we can help you draft one. We're not CPAs or tax accountants, but what we would essentially be drafting is a P&L, which is a profit and loss. It just talks about your revenue, and then you go revenue, your cost of goods, gross profit, expenses, then profit or loss, and we can do that very easily for you. Then there's utility payments under service agreements dated before February 15th. So if you had something that was dated on Valentine's Day, I guess that would actually work, but it should be before February 15th. So technically January, hopefully in 2019 because it's easier. But if you have utility payments under service agreements dated before February 15th, then that would be possible. And it's on your 1040. But if you haven't filed your 1040 for 2019, it's not a dead deal. You just have to, we'll have to craft one for you. And then also, say you haven't filed 19, but you actually were in business the same way that you're in business now in 18, then 18 taxes would work. 18 Schedule Cs would work because they're making those work. Okay, so that's the sole prop stuff. There's a lot of words, but I didn't want to make 5 slides. So there's 2 parts. There's FTE Reduction Exceptions, and I didn't give it to Alan before to make it look pretty, so I didn't have time. So this is the FTE Reduction Exceptions, and there's also an FTE Reduction Safe Harbor, which is the next slide. So number 1, Sunita, do you want to read this, or do you want me to read it, or do you want me to just pause and have everybody read it themselves? Like, what do you think?
I read through it. This is directly from the application, and our suggestion before we jump into FTE reduction exemptions is when you're completing the application, you want to start off with the Schedule A worksheet, which is the 4th page of the application. And then you also want to complete the Schedule A. You need that information first to be able to complete your application. So that's where you start off. It's like a tax return. You kind of work backwards and you complete the schedules to make sure that that information is correct. So that's what we're suggesting as well. We get a lot of questions in regards to FTE reductions. This is what is currently on the new application. So we're just going to read right through it. It's wordy, but it comes straight from there, so there's no misinterpretation of what it says. That's why I didn't change it in any way, because I want you to see exactly where it came from, the application, and the wording that is from the application. So, indicate the FTE. Any positions for which the borrower made good faith written offer to rehire an individual who was an employee on February 15th, 2020. And the borrower was unable to hire similarly qualified employees for unfilled positions on or before December 31st, 2020. We see this a lot with restaurants and other industries where they're making more in unemployment than they would normally or normally working at the business. So you fall into this exception if that is the case. So any positions for which the borrower made a good faith effort, written offer to restoring reduction. So this is a repeating, something that's repeating is written offer. So make sure it's a written offer, and we have been advising this for several weeks now. to restore any reduction in hours at the same salary or wages. So when you create this written offer, you're giving them the exact same salary and wages and time that they would be working, or increased in time, you know, just really depends. So you could say anywhere from 30 to 40 hours or whatever it is, but definitely the minimum that they worked before during the covered period or the alternative covered period, and the employee rejected the offer. Emails would be great. I know some people say that they don't have emails. It was a text message, you know. We don't know if that's going to work or not, but definitely keep that information. They may allow us to use that info. So number 3, for reduction exceptions. Any employees who during the COVID period or alt period were fired for cause, voluntarily resigned, or requested and received a reduction of their hours. In all of these cases, include these FTEs on this line only if the position was not filled by a new employee. Any FTE reductions in these cases do not reduce the borrower's loan forgiveness. So they're giving you a lot of opportunity as an out because of the situation that we're in regards to the $600 increase in pay for them. And also, some people are definitely scared to come back to work. So now we're going to jump into the safe harbor and what that means. So for the FTE reduction, there are 2 options for safe harbor. I believe that one was the first one. The borrower is exempt from the reduction in loan forgiveness based on the reduction in FTE employees described above if the borrower, sorry, this is just copied straight from there. So I did jump around a little bit and get this information. In good faith, able to document that it was unable to operate between, sorry, I'm gonna go to my own doc. So there's 2 separate, safe harbors. The borrower is exempt from the reduction in loan forgiveness based on a reduction in FTE employees. Described above if the borrower in good faith, which above is the reduction exemptions, in good faith, and is able to document that it was unable to operate between February 15th and the end of the covered period. So this applies to a lot of people, you know, hairdressers, stylists, people that own nail salons, some restaurants, it really just depends. They couldn't operate, you can't operate fully, so you fall into these safe harbor rules. And this is directly from the application. If you fall into any part of this, and this is in section 1, then you can use the safe harbor rule in your application. I'll let you guys read through the rest of that. So on the second slide, the borrower is exempt from the reduction in loan forgiveness based on a reduction in FTE employees described. Of the following conditions are met: the borrower reduced its FTE employee levels in the period beginning February 15th, 2020 and ending April 26th, 2020. And the borrower then restored its FTE employee levels by no later than December 31st, 2020 to its FTE employee levels in the borrower's pay period that included February 15th, 2020. It's a lot of words, and I get it, I understand, but that's why we are here to assist you one-on-one. We ask that you work on your schedule. So complete your Schedule A and your worksheet. Start to work on that and then reach out to us so that we can match you up with an advisor to help you through all of this. Because it is a lot of information that you need to know. And it's a bit confusing, you know, we get that, but it is the way it's written, it's legal terms. That's why it's a little bit confusing. And we can help you through it though. But the best way for us to do that is to be able to see your documents. It's more difficult for us to answer one-off questions about your certain scenario without seeing any backup. We could give you general information, but specific to your one question or several questions, it makes it more difficult to give you the correct answer when we don't have all of your documents in front of us to review it. So those are the options for the exemptions for FTE.
Thank you, Sunita. That's great. So it is wordy. It is a lot of stuff. You know, we didn't write it, so we're not trying to make it super difficult for you. But fortunately, it's written in like a law form. So it's it's in statute now, so we can't change it, unfortunately. So we just have to kind of accept it, unless they write another one, which hopefully they don't. So SBA Support. So they never jumped on. SBA stands for Small Business Administration. They're our federal funder. They allow us to do what we do every day really well because they fund us. We're the consulting arm of SBA. We're the largest in the U.S. as far as technical assistance concerned. So SBA loan support. So right now, if you get any type of SBA loan, whether or if you have any SBA loan, like if you have a 7A or a 504 loan, like you wouldn't necessarily know it's a 7A or 504 unless they told you. But if you have like a building loan, that's an SBA loan, you would probably know that. They should have already reached out to you, your lender, and paid your payment and your interest for the next 6 months. But they should have notified you within the first month of SBA offering this offer. If you get a new loan, like today going forward, or you got a new SBA loan, like when they first launched this part, like maybe a couple months ago, then they pay your principal and interest for the first 6 months. So this is this is if you say start a business today and you get an SBA 7A loan, which is what it would be, because no banks, I don't think any banks are going to do non-guaranteed loans today for startups because of the economy, and we can't predict what's going to happen, but it doesn't look really good. So what they're going to do for any startups, it's most likely 99% of the time going to be a 7A for startup. Anything that's not a building is a 7A loan. Anything that's not a building is a 10-year loan, mostly. So just whatever. People are going to tell you, well, it could be a 5 and 7 and 10 and 8 and 2, a 3.5. I get it, but most of them are 10 years. For 7A, for unsecured debt, what that means is you're not buying a building, you're not buying equipment, but they may put a lien on your business or your business assets or your personal home. And you're just going to have to be okay with it if you want the loan. Because right now, I don't think lenders, I've been talking to a lot of lenders daily, and it doesn't seem like they're going to do any loan unless you give them your house, meaning you put it up for collateral. But before COVID, they were doing these loans all the time with no houses. But I think today, my team and I have to stop that fight. I don't think they're going to do these loans without taking a home. So if you have a home and you want a business loan, they are going to secure it. If you don't believe me, and you could prove me wrong, that'd be awesome. Just give me a call or text me that you prove me wrong. That'd be great. I'd like to learn. But there's the 504, which is a building loan or a large piece of equipment loan, potentially land loan to build a building or to construct a building. The SBA will pay the principal and interest for the first 6 months, which is unheard of. Never been done before. It's pretty amazing. So this is not a deferral like the EIDL loan. So if you get the EIDL loan today, you don't have to make your first payment until the first of the 12th month. If you get a PPP loan today, you don't have to make a payment until 10 months after your chosen cover period. But for SBA, for brand new loans, you don't have to make a payment until the 7th month, and the first 6 months is free. Like you just get to take it. You can call it a grant, you can call it whatever you want, but they just pay it, which is badass, I think. All right, so SBA Disaster, you can call them if you want, or you can email them right here. So what we recommend is you put the loan number in the subject line so you can email them. If you get declined, we did a webinar on denial reasons. We should, if we added all the updates plus all the denial reasons, we would talk the whole time and we wouldn't get to Q&A. But we would like to know, and maybe Alan can do a poll, after I stop speaking, or maybe in like 10 minutes, because he's a badass. He can figure this out. I know he can. A poll that says, what do you want to learn more about? Do you want to learn more about the EIDL, the PPP, because we're not gonna break it out that much. It's either EIDL, the PPP, the Main Street programs that we don't know anything about yet, or how to reconsider your denial with EIDL, or maybe just say EIDL, PPP, EIDL denial, or Main Street programs. Okay, then we can kind of figure out how to build our decks as we go forward. Because we kind of sort of build them about 30 to 60 minutes before we launch them, because the information is so raw and real, and we have to figure out how to get it to you in a very dissected, regurgitated, but really kind of sort of easy way to understand it. But if you're reconsidering your business, your denial, because unfortunately ODA, Office of Disaster Assistance with SBA, which is the department that does all the EIDL loans, they're not telling you, from what we're hearing from our clients and from you probably, is that why you were declined. They're telling you sort of why you're declined. They're saying, hey, your credit score is under threshold. Well, guess what? They're not telling you what threshold is, and we don't know it. So we don't know if it's a minimum of a credit score of 550 or 600 or 700. We don't know. You know? So since we don't know, nobody's know, unless you can figure it out. So you can reconsider your stuff. So they're just giving you like blanketed stuff like misinformation. And nobody knows what the heck that means, but it's because you messed up on the application and you put like your routing number wrong, or you forgot a digit in your account number. Well, that messes everything up. And unless you fix it, they won't process it. All right, look at that. I didn't get to put it in because I was building it as we spoke. And Sunita, can you tell me the 5 counties that California Capital has in their EDA loan program? Can you tell the people? Is it SAC? Do you know the 5 counties?
Yes, so it's the ones that are connected. So it's Yuba County, it is El Dorado County, and it is Placer County.
Okay, Alan, can you put in the chat those 5 counties? Say them again, Sunita, one more time.
I could do. Hang on. Go ahead.
Sacramento, Yuba, Placerville,
No, Placer.
El Dorado. Placer, El Dorado. I don't think that's 5, but I think
That's 4.
All right, so what about YOLO? Is it YOLO count? YOLO counts.
Yes, it is YOLO.
YOLO, yeah. All right. Is that 5, Alan?
Yes.
Good job. All right, so I didn't get to put it in the deck. I apologize. But I'm going to bring it to you. And those 5 counties, you can look at them in the chat. If you don't know how to do that, email us. We'll tell you about it. Those 5 counties, if you want to know how to email us, we're just going to go here. Boom. Look at that. You can email us there. If you want to speak Spanish to somebody, you can email this Spanish-speaking team at espanol@asksbdc.com. And that Spanish-speaking team is run by Oscar Garcia. He's awesome. He has a great team. Julian Canetti is the CEO of the California Hispanic Chambers of Commerce's. And Oscar and his team can do anything that we're doing today in Spanish. They're doing a great job. You can call us with this number here, and you can watch us live on asksbdc.com. So we have people that are answering this phone call today, every day, this number. It's better to call than to email. It's better to call than to email. Please call us. We're here for you. We have 50 advisors ready to help you. And then we have all these other centers in our region. We have 20, and they all have their own 10 to 20 advisors or 30 advisors that can help you. So if you don't want to call us, that's fine. Call them. They're in your region, your area, whatever's closest to your business, wherever that is. So really quick, those 5 counties. Actually, this is what I'm going to do. I'm going to do this. I'm going to stop sharing this. I'm gonna write it in a deck for you really quick, and then you will know because it's easier for you to see it. I get it, so I'm gonna do that really quick. And as I do that, Sunita is gonna continue to answer questions, or you could read them live and answer them. It's up to you, Sunita, but I'm just gonna change this really quick.
Okay, so let's go into the questions. Have you seen any new guidance on being able to use PPP funds to pay a 1099 contractor? No, we have not. Or be able to pay members of LLCs using a Schedule K-1 as proof if they don't have payroll history. We have not, Gore, and thank you for that. Is quite a question, and it's a great question because it does get asked a lot. And at this point in time, no, we don't see that. It is employees If they get paid, if you have a 941 from them from last year, if they are a business owner, then they would be considered a business employee. I'm sorry, employee owner. That's how you differentiate that. If you need more guidance in this, please give us a call or email us, 833 ask SBDC or loans@asksbdc.com.
Sunita, one of the questions that came in was because during there was a question from Kerry Hughes. It's about 4 or 5 down. Also got an upvote, which was they would say that the bit about payroll tax deferral actually was on the slide but never got talked to. Could you talk to that briefly? What's happening on the payroll tax deferral?
They can do it. I mean, that's all the information that we have on that.
Alan,
We don't go deep into that. We don't go deep into that because it's not a loan. So we do have other HR webinars and such that go deep into that. We just give you information on what is offered. And you can go to the state ca.gov and you can find more information in regards to that. So unfortunately, this particular webinar does not dig deep into that. Does not
because
dive.
we're not tax accountants, Alan. So we can't really answer that question. All we know is it's deferred. Okay.
So so Pixel 2 has given us some great information. Pixel 2, I've seen them ask questions on here and they've been with us for quite a long time. She says, just letting everyone know that we applied for EIDL on Tuesday and our loan was approved today. Super quick, in case anyone is wondering how long it takes if you just applied. That is amazing, Pixel 2. I believe it's probably because you had a pretty easy, your application or your tax returns. You probably don't have K1s. Those types of things will make it a little bit more difficult to go through. So congratulations on that, Pixel. Let us know if you need more information on how you need to spend that money. Appreciate you letting us know that. Can I have both PPP and EIDL? Yes, you can. If so, do I have to pay back as a loan on any? Confusing. So PPP is a possibility of getting that completely forgivable. We've gone through the instances of how to get that forgivable. If you pay the majority, if you use the majority of that money towards payroll, your forgiveness ability has increased. If you use it for the appropriate other uses, such as utilities, then you have but you have to spend at least 60% on payroll to get maximum up to maximum forgivability.
Is that true now still? Is that true?
You have to pay, 60% at least. That's the minimum to get maximum forgivability. And the rest of it could be paid towards allowable categories. Let's see.
Oh my God.
If I get the PPP loan after 6/5, do I have to keep my FTE employed the full 24 weeks in order to be fully forgiven? The application currently does not state that. It says the average. So if you're unable to bring everybody back until towards the end because of the way your business is opening up, then no, you don't have to keep them the full, or you don't have to bring them all back the first day. If you wanted to do most of them towards the end, as the way it reads right now, it's okay. But again, that may change. I think it'll just lighten it up more. I don't think they're going to tighten it up. So Christine, of course, come back. And if anything does change more, then we will go over that on our next webinar or whenever it does.
Cindy, I'm going to jump in, okay?
Yeah.
All right, cool. So everyone, those 5 counties, this is hot off the press. I heard it yesterday from the lender. It's a direct lender in Sacramento called, actually, I'm not going to tell you the lender because you're probably going to call them. Okay, I'm not going to tell you the lender. because I want you to reach out to us, because if you call the lender, they're not going to be able to handle all your inquiries. I want you to email us at loans@asksbdc.com or call us at 833-ASK-SBDC. Can you put that in the chat, please, Alan? Like 100 times? Put loans@asksbdc.com. That's our email. If you want one of these loans that I have on here, it's a direct loan. You can probably get it within maybe 2 to 3 weeks, more like 4, but 2 to 4 weeks. We'll say that. This lender is getting better at what they're doing. I want you to email us with a subject line that says your county. And then the amount, I want to say your county hyphen the amount of loan you want, okay? Email us today, blow us up, make us go crazy, make me work all weekend to talk to you to get you this money, because I know you need it, and we're gonna help you at no cost. Email us at loans@asksbdc.com, put the county that your business is in, hyphen the dollar amount you want or need. If you're a micro business or a little business, which is like usually under 5 employees, and you need a little loan, 1,000 to 50,000, which is a little loan, a micro loan, call what you want, I don't care. It's a 7-year loan. So 1% rate, which is amazing. It's 2.25 lower than prime, which is insane. It's a 3% loan fee, so you do have to pay for it. Unlike the PPP and the EIDL, there's no loan fees. But this is a small business nonprofit lender, and they have to pay their bills. And 1% loan rate, they're not making any money on this. It's a great loan. So if you need a little loan, like 5 or 7.5 or 8.5 or whatever, if you don't know what 3% loan fee means, if it's a $10,000 loan, you times that by 3%, 0.03, which is $300 on a $10,000 loan. So if you take $300, and you add $250, it's going to cost you $550 to get this money, which is cheap. And then it's going to be 7 years amortized at 1%. But if you want a little bit of a bigger loan, up to $150,000 to save your business or reinvent your business or relaunch your business or potentially start a business. I think this is for starting too. It's a 7-year loan at 1%, at 3% loan fee plus $250 doc fee. The doc fee may be a little higher. I don't know. I think it's $250. It might be like maybe $300, but I think it's $250 for this lender. I think Sunita's confirming, because we do a lot of business with this lender. We send them a lot of deals because we have a lot of clients that need money. But you have to be in one of these 5 counties. If you take 3% of a $150,000 loan, it's a $4,500 fee. This lender will let you put the fees inside the loan. So if you need 150, you can only get 145 because you have a $4,500 fee. And you're just going to have to be okay with that. So if you take 4,500 and you plus 250, that's 4,750 is your loan fee. So you can get a loan for 155,250 or 155,750, and then include your fees. Okay? These loans are available. This lender wants to spend the money like tomorrow. They think it's going to take 6 months to spend it. I told them it's probably going to take 6 days to spend it. So email us, call us. Email us, call us. All right, I'm done on my rampage on that. Okay, so I'm going to jump into questions. Is that okay, Sunita, or do you want to do it? Sorry.
Yeah.
You're cool? All right, cool. All right, we have 33 minutes to answer 26. Look at that. Sunita's answered 42. Thank you, Sunita. All right, so I have one client. This must be Stilson. Stilson must be an advisor. Okay, I have one client and a report from a non-client that they've applied for EIDL and were approved. We're probably not approved yet and have not received the advance. Oh, we're approved, but hasn't received the advance. They both called the customer service number and were told that their application had not checked the box for the advance, which is very, very common because it was like a little box. It was hard to see. In both cases, that was not true. Well, good. Okay. There was also a record of an earlier call and email to correct the number of employees on the application, but that note was not in their file. Is there a glitch? Do they know how to reapply? Do they now know? Also, no, nobody can reapply unless they were denied. Nobody can reapply unless they were denied. And Stilson, this is what I need you to do. Alan's going to put it in the chat, but I'm going to type it for you. It's sfomail@gmail, not Gmail, Jesus, sba.gov. That'd be funny if it was Gmail. sfomail@sba.gov. Okay, you email that guy, Noah. Just copy that and send it to him. He'll answer it for you, hopefully. All right. When does the 8 weeks start? When they fund or when they set you a promissory note to sign? Oh. The 8 weeks start the day you get the money in your bank account. Also, Wells Fargo keeps sending requests for docs even after sending a promissory note to DocuSign. When I called, they said maybe a glitch, but it's very stressful. Of course, all this stuff is very stressful. We get it because of still constant emails to send docs. If you get, all right, M. Arcana. I can't answer your question here because there's way too much to ask. So you need to email us or call us. I'm going to type it in the email or this thing here.
I'll take care of that for you.
Just take care of it. I don't type very fast. Just M Arcana. Just email us or call us because you know what? I'm going to call Wells Fargo for you and figure this out. Okay.
Hey, Scott, can I just interject something in there for best practices for businesses? Just from what I've been seeing, I have been going to restaurants. We have a lot of local restaurants that are opening up. One of the things that I have seen is that their websites are not updated yet, showing that they're open. So unless if you walk by and try to open up the door, you don't know if they're open or not. And other businesses. The lights aren't on, it's dark, but they're there. I would suggest putting something on your door saying, yes, we are open with your new hours. That way, when you're walking past, people know what time you're open, when you're open, you know, what time you're open, the days that you're open, you know, 10 a.m., 12 a.m., whatever it is. These are best practices for businesses that I think we really need to go over, which is not a loan scenario, but it is a best practice on letting people know that you are open. So please, business owners, can you put on your doors your new working hours? Please put on, if you have a website, what your times that you're opening, that you're open. Also on your voicemails, if you have a phone, please put it there as well. My husband travels a lot. He's all over the country and he eats out all the time. He's finding it difficult as well to find restaurants that are open, but they are open in other places. But the information is not there. So it's not readily available. So I would say another thing possibly to do this weekend is to go ahead and get all that stuff together and show that you're open so people can come and visit you. So that was just my 2 cents. Thank you.
Hey, I'm going to tell Mark that when I see him, Sunita, that you told a bunch of people on a webinar that he eats out all the time. I think it's kind of messed up that you did that, but kind of cool at the same time. So what are you going to do? Sunita's husband, Mark, he sells Snap-on tools. So if you like some really cool tools, he can help you start a franchise and sell you some tools. It's really cool. All right. So Alan, I need you to reply to Shirley Moore. She says, how do we start a new 7A or 504 loan? It is as easy as the EIDL. It is only if you call us. We can make it super easy. Is it a web portal? No. But we don't need a web portal because we can do this stuff in like 15, 30 minutes, okay? So email us. And if your advisor can't do it for you, Sunita and I will get involved because we love this stuff. Oh, Michelle Mahoney wants to know the hours of 833 Ask SBDC. Well, it's a call center, so we can't ask people to work 24 hours because guess what? They're advisors. But we might find one day that says, you know what, Scott, I'll take the 2 a.m. or take the 10 p.m. to 6 a.m. slot. We
have gotten a lot more calls because I believe the Forbes wrote about us again. So if it does go to voicemail, please be assured that somebody is going to contact you back. So if you call us and it goes to voicemail, please leave a message and we are calling people back. Or go to loans at Ask SBDC, also making sure we get back to everyone there too. It's usually between same day, 24 hours that we can get back to you. It just really depends on when you email us. I know, or call us. Some people call pretty late at night or email because I know everyone's up worried about these things, and you know, we want to be there for you, but most likely if you email us or call us late, then it would be the next morning. But we have people picking up the phone until 5 or 6 o'clock, as early as 7 a.m. on the weekends. If it does go to voicemail, we do send it out to our advisors that are working the weekend, and hopefully they'll be able to schedule you in to answer those questions as well.
Thank you. So yeah, I would just email us, because you know, sometimes we get bored on the weekends and we email back. I started this webinar late. Has anything been mentioned about keeping employees that make 100 grand longer than the 8 weeks and have it forgiven? I have many employees that make that amount, and I have PPP funds that are still remaining that I can use for the 24 weeks. So that's a great question. No, there's no more updated information on that, because from what we know, the increase from 15,000
maxed out.
What?
They're still maxed out at that amount of the 100,000.
Yeah.
So you don't get any more. But if you use your 2.5 weeks, you know, towards everyone's payroll, but they're limited to the 100,000. So no, that did not change. For an employee owner, it changed, and we went over that in slides previous to this. And this deck will be on the chat. Alan will put it there. Also, this whole webinar is on asksbdc.com. It should be there by Monday or Tuesday.
Yeah, our video, all our stuff gets both put both to our YouTube channel and to Ask SBDC, and the links for both of those are in the chat right now.
We're getting a lot of questions, and I believe there is a glitch. I think that's what Noah stated, that people are getting their EIDL loan before they're getting their advance. That is an issue because it's been happening a lot, and a lot of people are asking about it. You can go back to them and ask them that you want to be reconsidered for the advance, or you can go to in the San Francisco area, SFO mail at SBA.gov. I apologize, I don't have the Sacramento. If you're in the Sacramento area, I don't have that readily available. If I find it.
Is it Sacramento_do, D-O, at SBA.gov?
Yes.
Is that what it is? Okay. Can you put that in the chat, Alan? So like if you're like Stockton east up the Nevada, the Oregon border to like, what is it? Siskiyou, I think, or Wairika. That includes Sacramento and Yolo and El Dorado and Galt and all those other areas, and then Placerville and up to Modoc, Lassen, that area. You email Sacramento_do, D-O, at SBA.gov. If you are the 9 counties of the Bay Area and then the coast, all the way to Humboldt, you email SFO mail at Gmail. Sorry. Never mind. It's not Gmail. Jesus. Actually, we should make a slide next time, Sunita, that says those two things, which we'll do that. We'll make note on that. All right. Somebody's asking me, and I was typing this as we were all kind of speaking. It says, can you give guidance, general guidance, once again, on whether the SBA EIDL funds can be used to pay the balance on a business credit card? So you can't pay it off. If it's normal practice for you to buy let's say all your cost of goods or all your supplies on a credit card and pay it off every month, then yes, you can. But if it's not a normal practice, you're just trying to pay off a credit card because you have a large balance, the answer is no. I mean, you could do it, but I wouldn't recommend you to do it. You can do whatever you want. It's you and your business, but I wouldn't do it if I were you, because they may or may not come in and audit how these funds were. They're not telling us, but because they don't even know. Nobody really knows what's going on right now. So you can't. So yeah. So that's Nina Gibbs. It's a good question, but you can't.
And there is a document that Alan is going to put in the chat, and it's going to go over a an article from SBA in regards to what you can, what's eligible and ineligible uses of funds. It's general, but that's the only thing we can get into. That's the only thing that we have from SBA on what you can use and cannot use the loan funds for.
That's the one you sent me a while ago, Sunita?
Yes, the one that I've been putting on the chat or in the Q&A, and people have said they can't, for some reason, it won't open up for them.
Yeah, I tested it and it worked for me. So that's
so you may have to get it in the chat. Yeah, so if anyone's looking for that, please look for it in the chat, and maybe it's an issue with the Q&A, me throwing it in there.
All right. We've answered 63. We have 10 left. We have 21 minutes. I think we'll probably do it. If the PPP loan was received on May 5th and 8 weeks ends on June 29th, and the July 1st rent is paid on June 29th, would that be considered as a prepaid expense? The client does not want to use a 24-week and is concerned. That's a good question, Larry. Do you know the answer to that, Sunita, or would we have to check?
No, I believe they're not going to be able to use the funds because it's not rent for like June 15th.
Oh, you're right. You're right.
15th.
Yeah, you're right. It's for the future.
It's for future rent. So unfortunately, they cannot.
Yeah, you're right. It's for future. All right, I'm a sole prop and I want to use 100% of my PPP for my payroll, as PPP is only $3,000. Can I do that, or use $2,000 for payroll and $1,000 for IRA contribution? As a sole prop, I was supposed to.
Yeah, you can't use sole prop you can't use it towards benefits. It has to all be towards your payroll. So if you have more questions in regards to that, please reach out to us. Yeah, loans@asksbdc.com, because we need to know what your line 31 is and all that kind of good stuff to make sure that you're in line. So we need a little bit more documentation and information from you to make sure that you are using it sufficiently or to the best capacity to get forgiveness.
All right. Somebody asked, but I answered it too fast. I probably should have. I don't know who asked this, but if you're listening, somebody asked if you have the PPP, is it worth getting the EIDL advance? I say the more money, the better, but it's up to you. You got to save your business. So I don't know. I would say yes, but if you do get an EIDL advance, it's going to get minus from your total PPP forgiveness amount, and then that portion is going to become a loan at 1% for either 2 or 5, depending on where you're at in the funding thing. But it's up to you. You can do what you want. That's 100% forgivable, the advance, but it's up to you. Somebody's asking that they have a small cabin in Tahoe, El Dorado County, Jesse Chung. Would I qualify? So technically, yes, your county qualifies. Would you qualify for the loan? I don't know. I'm not sure the lender's doing passive. It depends what you do with this house. I don't know what you do. Do you run a business out of it, or do you like hang out every once in a while on it? I don't know what you do. Do you rent it out like an Airbnb? Jesse, just email us, please. Tell us more about you and what you do in Tahoe, or invite us out. We can just hang out there, okay? Somebody says, I meant 8-week period above. Oh, Debbie Curtis. Our PPP 3-week period ended June 15th. Payroll for June 1 to 15th is today. Well, that's weird. I mean, June 19th.
No, it's that's similar to the way like we're paid that way.
Huh? Oh, I don't know how to answer that question then, actually.
I'm sorry, which one?
It's the one on the bottom, Debbie Curtis. She says that she's talking about the 8-week period. She says, do you see it? Our PPP 3-week period. What do you mean? Oh, 8 weeks.
I assume that probably was an 8. Meant to be an 8.
It's supposed to be an 8. There's like another 3 missing on top of it. Yeah, so it's an 8. I mean, so an 8. So she says her 8-week period ended June 15th. Her payroll from June 1 to 15. So I think it's okay, right? I think that is qualified, I think, actually, because it incurred.
Week period ended June 15th. Payroll for June 1st is due today. Yes, that is fine because it is incurred during the period. the covered period. So since it was incurred during the covered period, it is okay to pay.
All right, we have 17 minutes left. We have 70 questions. We have 7 more. Not bad. We're doing a really good job. All right, thanks.
I can run that poll you asked for, Scott.
When are you going to run it? Like, we only have 17 minutes. Are you going to wait till like 18 minutes? Like, what's going on?
I'll kick it off now. People can answer it.
Yeah, just do that. We'll get to these Q&As, but just go ahead and run that poll. Thank you.
People should be seeing it on their screens. You probably can't because I don't think that's turned on for you guys, but
I do see it, yeah.
okay.
Yeah. I'm going to answer it too. Oh, it says I can't. That's
Yeah, you probably should. Yeah,
That's dumb, dude. I want to answer it because I want to know more about Main Street. I want to know who on the call is going to teach me.
Yeah. The problem is if that's one
Are
that
you
gets
gonna
those
teach
votes,
me?
then you've got to present it. You know.
That means I'm going to have to read it this weekend.
Yeah.
Monday. Yeah. All right. Well, then while you're doing that, thanks for all you do, guys. Without the PPP and EIDL, I would have been forced to close shop. Without all the info you've given me, I would not have received these funds. Oh, thank you, Laura. Congratulations.
Thank you, Laura.
Thank
Yeah,
you. It's really cool you got the money. You know, unfortunately, we're learning as you're learning as small business owners. Hopefully we learn faster than you so we can teach you, but if you learn it faster than us, then you can teach us, then we can teach other people. So thank you. We do learn a lot from you because we don't know everything. So guess what? We're not the ones giving you the money. And also, guess what? We're not the ones that wrote the application or anything of it. We're just regurgitating it for you. Is an employee penalized visa? You guys, hey, if you could write like real sentences, that'd be cool. And if you could spell the words right, that'd also be cool. If you could check it, that'd be cool. I don't know what vis-a-vis means. The forgiveness.
Vis-a-vis means in regards to.
All right. Well, it'd be cool if they typed English because I don't speak any other language than English. It'd be really cool. Okay. Do you want to answer this one since you speak that language?
I can translate it for you.
Okay. Is an employer penalized if after 8 weeks they lay off 2 employees who have hit the 15,385 max for a few weeks to get UI to help conserve cash for other employees? You would have to follow the safe harbor or the other exceptions on being able to keep them or not. That's what we would suggest. If you have more questions, sorry, the questions, I'm trying to answer it the way I think you're asking it. You can reach out to us at loans@asksbdc.com and we'll get you with an advisor to help you one-on-one to make sure that this is the correct question that you wanted to ask.
So if you're Selena Walton, we're talking about you. We don't know how to answer it on the phone here, but we will know if you call us because you wrote like a kind of a weird sentence there with the vis-a-vis. So a child care center received the PPP funds and is using through them for payroll in 8 weeks. She will apply for forgiveness and then is looking at completely closing her business. Is there any reason this would put her at risk of losing her forgiveness? Well, we don't know that yet. It's a great question, Nina. The bank will have up to 60 days to decide on forgiveness. And by that time, she could be closed. So Nina and everyone else on the call that's listening today, the lenders that are giving forgivability don't know how to give forgivability. You know why? Even though there's an application, because no one has done it yet. So no one knows what they're doing yet. So as a business owner, I don't know if you ask for forgiveness when you file bankruptcy or you close. I don't know if that actually is going to allow you to get forgivability or not. Because if you default on a loan traditionally before COVID, it's not forgiven. It just stays on your record for life until you pay it off because it's a federal lien. So I don't know how to answer that question, Nina, but you can call us or email us and we'll help you out. But if somebody's 8 weeks is over, which this is the 9th week of the first funding. So there's a lot of people that 8th week is over, but if they want to stay with the 8 week, they don't want to do the 24 week because They just can't pay that much. We get it, but the lenders are not ready, and they're not going to be ready. Okay? So tell your clients and business owners to just be patient. And I apologize, but they're just not ready. They're not ready to collect your 1,000 pieces of papers if you do it manually, or your 100 megabytes of files to look through to process. Because guess what? Lenders barely had enough people to process PPP. Most didn't. You think they have enough people to process the paperwork for everybody? Nope, they don't. And they're probably not even thinking about it. If we pay...
Yeah, so before they open up to receive your forgiveness applications, reach out to us for one-on-one counseling, for advising. So that way we can make sure, to the best of our ability, that you have what you need to get maximum forgiveness. So in the meantime, that's what you can do to get ready for it until they open up and they're ready to receive forgiveness applications. All
right, so Sunita just challenged us, our whole team now. That's amazing. Thanks for mentioning that, Sunita. She challenged us to help you put your PPP forgivability paperwork together, and we might not even know how to do it, but we're going to learn together, okay? So call us to help you put all your paperwork together. We'll put it in a really nice bow. We have this new technology that we're using. It's called share files, very similar to Dropbox, but a whole lot better. And we have these secure links we can send you, so you can send all this stuff in, and we can save it for you all together at no cost with your name on it in a file. And when you're ready to go to your lender, you can ask for this little link, and we'll send it to you. And then you can send it to your bank, because that would be the easiest way to do it. Because when I receive financials from borrowers or clients or whatever you want to call yourself, business owners, is that I receive like 10 emails with a bunch of different attachments. And guess what I do? I put it in a share file link so I can share it with people, which is the easiest way to do it. And it's secure, meaning the people that are hacking into my internet every day can't get it. Okay? Cool. There you go. Look at that. That's a big ask. That we're going to be busy all weekend now. I'm a restaurant but it's a really nice offer though that we're going to do that now. So thank you, Samina. It's a very good gesture. We have 10 minutes, and
I'll read this one. I'm a restaurant with an existing SBA loan. I just received the EIDL. Can I use EIDL funds to pay for business operations? Yes, you can. And the proceeds from those operations to pay down the current loan. This is not using EIDL funds directly pay down the existing loan, but the EIDL allows me to pay down the loan. That's correct, you can. You can use your own money, your cash flow to do that. Just keep the money separate, and you should be okay. You're using your EIDL for operating costs only, not paying down any loans, not paying off any loans. And then you can use your cash flow that you're getting on a daily basis, weekly basis, to pay those other loans. I would try not to use the same money for the same purpose though, meaning paying the payments for that particular loan, just so it doesn't get muddled. I'm, as I always say, more conservative. In that way you have a better chance of not getting those funds mixed up. Right. Dana's saying, I read that they were considering automatically forgiving PPP loans less than 150,000. Is this a rumor? There's nothing written in law, Dana, so yes.
Stop spreading rumors, Dana.
Yeah.
I don't know where you get that from. Maybe like a little birdie, or like you're just making up stuff. It's really weird. So we don't talk about anything that is not law. Even if we get a text from SBA that says, hey, it's coming, we don't talk about it until it's actually real, okay? But you guys can talk about whatever you want to talk about. But we know you find out information better than we do because you read CNN or you watch the news or you do whatever you do, and you find it out better than we do. But we're not going to talk to you about it until we actually know it's written and the president signs it. So we don't know if that's true, but that'd be really cool, actually, Dana, if that's true, but I don't think so.
It would, yeah, it would be great, but we have not heard anything come down the pike in regards to that. We have not seen anything or heard SBA talk about that at all. So Sarah's asking, if I receive my PPP June 1st, but would like 24 weeks to spend the money, can it be spent in any manner? not necessary consecutively between now and December 31st, as long as the 60-40 requirements are met. For example, if I have one full-time employee who I would like to bring back part-time now, but there may be lapses in work, can I use PPP for her payroll costs and have it forgiven, even though her hours have been greatly reduced, or there are breaks in employment due to reduced work because of COVID? So that's a great question. We always have to go back to, what is PPP for? PPP was created to keep people off of unemployment and to bring them back to work. If for some reason you're unable to bring her back or him back, them back at full capacity because you are limited because of the laws, you can't open up to full capacity if you're a restaurant, or you can't open up, a hair salon or whatever it is, you have to have distances, you can't have full capacity, then it's a possibility, but this is a lot here. For us to go over it with you one-on-one is the best way to go, but I can't say that you will be 100% forgivable. I believe it may be a portion, the way that this, your question is being asked.
Sunita, do you know about, I'm trying to text somebody from SBA and see if they know the answer to, just read that if you take the 24 weeks, you can pay an employee up to $46,154. So you can pay them, but you can't get it forgiven, right? Like, do you see that answer, that question, Dana Pluck?
Yeah, I answered that. Well, I mean, if it's lower, if they're not back full time, I'm just saying the FTE issue, there might be an FTE issue, but she may be able to overcome that with safe harbor or exception.
No, it's a different question. Different question.
Oh, okay, sorry. Oh, Dana down there. I just read that if you take the 24 weeks, you can pay an employee up to $46,154. Was that from the application, Dana? Is that where you read that?
If you open it up to Dana, just find Dana Pluck so she can talk to us, Alan. If you could do that really quick, that'd be cool.
She can just email us back or tell us. Dana, if that was on the application, if that is where you read it, then yes.
So Dana is now allowed
if
to
you
talk.
read it,
can I talk?
Read it,
unmute yourself.
Hi, Dana.
So hi. No, I just got an update from like a business journals that said that they, there was a new ruling on Tuesday night. I can read this out loud. It says, previous guidance.
It's not on the application, Dana. I would not. Not say that.
I agree with Sunita. If you can take a picture of that and send it, or scan the article and send it to us, that'd be awesome at loans@asksbdc.com.
Yeah, it says that you can do it for employees, but that the owners can only take the 10 weeks, the $20,000 amount, because they're saying that if you're going to continue to pay employees, it's going to be more than the, obviously the question that was asked earlier is like, do I have to lay my employees off because they're at 15,000? Like, that doesn't make sense. Why would you lay them off and then bring them back again just to meet the forgiveness? So this, I'll send you the email.
Yeah, can you send us the email? Just actually, you know what? Never mind. I'm not gonna tell you that on the.
I'm looking in the application as well to see if it's there.
Yeah. I mean, it's saying that this information just came out on Tuesday night, that it was just approved. So, I mean, it's probably new information that's not been discussed yet. Yeah. Great.
Thank you, Dana. Appreciate that.
Thank you. Thanks.
Thanks, Dana.
Mm-hmm.
All right, we have 3 minutes left and we have one question. It's so exciting. So here's an interesting one. We applied a few days ago for the EIDL for a nonprofit with an all-volunteer staff. We were offered the loan this morning for $0. The nonprofit also got a deposit this morning from SBAD. That's what he put it together. SBAD is.
Yeah.
You made me laugh. Thank you. Plays days. Okay, so SBAD is SBA D for disaster. That's the EIDL advance. Well, it should be for $3,000. Yeah, that's the EIDL advance. Yeah. I don't know why you got offered $0 play days, but if you want to email us, we can help you out. We'll figure it out. I want to have a play day too. That'd be awesome to take it as a day off.
I did find something right now. It's on the interim ruling. It's the third interim final rule from the 17th. And it says payroll costs, including salary, wages, and tips up to $100,000 of annualized pay per employee. For 24 weeks, a maximum of $46,154 per individual, or for 8 weeks, it's a maximum of the $15,385. So we apologize that we're giving misinformation earlier. This is what just came out on the interim on the 17th, as well as covered benefits for employees, but not owners, including health care expenses, retirement contributions, and state taxes imposed on employee payroll, paid by the employer, such as unemployment insurance premiums. And then at the bottom of that, that is on page 1. It doesn't really say which page, so I apologize. So yes, I will put that information in the chat, and it comes straight from the IFR dated.
I put a link to the IFR in the chat if anybody wants to jump in there and spend, what, 10 hours or whatever working it out for themselves.
Truly a great read.
Yeah.
Hey, Sunita,
For
so
our folks at SBAD, yes.
what does it say? It says the max is 46, something.
For 24 weeks, it is a maximum of $46,154 per individual. That's going to be, I don't know, I think that's going to be tough, because if you got 2.5 months of payroll, you don't want to max them out too quickly. But you know, it's per individual company, and that's why I keep saying that you should reach out to us, because every single business is different. Even if you are an LLC or a corporation, every single business is different.
Can you tell me the number, please? It's 46 what?
$46,154. So Gloria is saying, I haven't taken the EIDL because of the restriction, and I wanted to see what my payments will be from the PPP. Can I use the EIDL to pay my inventory, even if my inventory is all import? The EIDL has a clause by America. We sell fasteners, nuts, bolts, and such. America and some items. It's saying that they would prefer you to use American made, but you don't have to. It is a preference for SBA to use American made inventory. That way it keeps everyone here still busy. So, but it does not have to, Gloria. Okay, that was the last question in the Q&A. I think it was Donna. Donna, thank you so much for letting us know about the 46,154. We try to keep on everything, and I do believe I read that earlier this week, but as you, it's hard to retain everything.
So Sunita,
thank you so much.
So real quick, Sunita, so you're saying that it's this number, this 46,154 for employees, but for owners, it's still 20,833.
That is correct.
Okay, cool. And then thanks for the poll, Alan. So it's mostly PPP. Interesting. Oh, a lot of people want to do the Main Street, and 8% idle now, 18% for idle.
Well, I assume that's because you voted for it yourself as well, and people are just taking a lead from you, Scott.
Yeah, but
we'll continue talking about the PPP, because that is definitely the hot button.
It was. So next time we'll do a different poll where we break it up and we say,
Let's talk about the poll, and we can work. I can build whatever polls you want, Scott, because
I know, but we should either do.
Oh, it's 12:02, everyone.
We gotta go. All right, we gotta go. Bye. Bye. Happy weekend, everybody.
have a great weekend. We'll see you all on Monday.